So I just want to do a quick little market update real quick because everything bloody, right? So we're looking at QQQ, the NASDAQ technology stocks. Like I've been saying in my videos, this trend line was going to break. It didn't even want to bounce. It was more of a technical bounce. I kept saying that it was weak. So we flushing here. I mean, we got room to 350. I think we could very well possibly see that. And as an investor, when you see these dips, every red day or every dip is not buyable. Depending on, like I said, you gotta just play what the Fed is doing. We're looking at ARC. You can see that's making another leg lower. You look at, I had some alerts go off of Snapchat. That's making another leg lower. I'm not gonna lie. Back in October, early November, I thought Snapchat was gonna at least try to bounce before we got into this whole crazy um, you know, market, like when stuff just get real volatile and start flushing. So some stuff that I'm looking at for dip buys are one, Disney. This is my favorite. I'll call it a fun stock for this year specifically. This and Tilray, right? So you got this asymmetrical triangle here, and if I just redraw those lines, we connected some higher lows, right? And we connecting some lower highs. I can't tell you which way Disney is going to break. My bias is bullish because I'm bullish on this company, this stock specifically, just based off of the reopening trade, uh, people going back to theme parks, and the pandemic no longer being an issue. But I'm not looking to trade contracts on this. I would only personally be looking to buy equity that I would be okay with holding forever, knowing very well that this stock could flush 142 and go however low, right? Disney ain't going nowhere. You got metaverse stuff coming up too. They got a lot of good stuff going on. People going back to movie theaters. They got the whole Disney network thing going on. Disney is a company that's going to be around forever, in my opinion. Something else that I would say, Target. Target is down. We had sort of a little triangular pattern here, and you can see that it's breaking below, which I did honestly expect. So I was in no rush to buy any of this. I bought some right up in here back in December, and I sold right here because I knew it was going. 238 was my level to get to and flush or reject. It got to 236. That was a 200-day moving average. So I'm expecting Target to come back and test honestly below 215. You got this broadening formation where, I mean, it's there. So I like it up in here. And today we had retail sales come out. They were bad. They were, I think, the worst since like um, February 2021 or something like that. So this is the kind of stuff that you want to look for. You want to see stuff selling off on bad news, not because there is a problem with how this stock or this company might work based on Fed policies, but you want to find bad news, bad data, and find good support levels, reevaluate the situation once you get down to those support levels and say, this is a good trade for me. This is a good long-term investment for me. That's what type of trader I am. Because you can bounce anything off of any level for a scalp or day trade or whatever, but I would be looking to hold probably some contracts that's 6 to 12 months out on target. Once we get under 215, that's when I'm gonna start getting interested. That 224 level, it kept bouncing there. I kept missing it, but I mean, I wasn't in a rush to trade it just with market volatility. I think we eventually go back and test the 270s. Um, this trend has been holding. Something else that I am interested in dip buying. I keep talking about Nucor. It's holding this trend line very well. You see, it got down here and it snapped back immediately. It didn't even hesitate to bounce. Very different from QQQ. CLF is another thing. I talked about this last night. My Fibonacci extensions here, my Elliott wave theory. I can see this testing 30.7 very soon. Broke out of this downtrend at the end of the year last year. Um, as far as a short-term trade, I was potentially looking to scalp Home Depot on the break below 379. You can see It has a M. This is a double top formation. So I mean, it's gonna flush 379. Don't know how low it goes, but like I said, this is a company that you could probably buy and hold forever. Once you see a nasty flush, you got bad retail data. Uh, I mean, it clearly has formed a top. I don't. I mean, if it get back down to 342, 343, the 340 range, I'll be looking to maybe buy some shares, buy some equity. Like I said, I reevaluate the situation once it gets there. Uh, I mean, we could even come as low as 299. I don't put nothing past the market right now. As far as technology stuff, people kept saying that big tech was going to be safe. Yeah, I doubt it. You can see here, Microsoft had a bit of an M formation. You see, Netflix thing has been getting pummeled, pummeled. You can't buy this dip, in my opinion. I would refrain from trying to buy these dips and stuff that won't fit the market theme under what the Fed has going on. Something that I am looking to dip by, not JP Morgan specifically, but they reported earnings today. I kept saying that these stocks, these banks was going to sell off after earnings. They, I don't know why they typically just been doing that lately. They run up into earnings and then just plummet. So I caught a good chunk of that run. You can see Morgan Stanley is down. I mean, it was up at like 170 in the pre-market. So we look at this on the 15-minute chart. This looks horrific. I mean, horrific. I don't see nothing wrong with buying a dip if you're in a rush, as long as you got some buying power. Um, I'm talking about just for long-term equity holds. So I think banks do really well this year. I sold I sold all of my XLF right here, just because we were at a top. And as you can see, like I said, I mean, I've been talking about this channel for I don't know how long now. It get up in this channel, it sells off. It gets in this channel, it bounces. I'm gonna be looking to buy right up in here, and I might start nibbling right under 40, because you can see these anchored VWAPs. That's where they sitting at, and I don't know which one will hold, but I do know that banks will perform well this year. You can see at the beginning of the year they just skyrocketed. That's where people want to be at. They want to be in the banks, and banks that I specifically like. Citigroup. I bought Citigroup right up in here, um, and I sold right here because we were getting close to earnings, and I was like, I'm not even gonna chance it. It typically does this. See how it's selling off is down. I will be looking to rebuy again when we get. I mean, it's gonna be some volatility, so we'll see how price action looks. But I mean, if we get back down below 60, that's a no brainer in my opinion. Wells Fargo, it was actually trying to continue to run today, so that was something that was interesting to see. I think they beat on like their top and bottom lines. But you can't chase this up here. You cannot chase this up here. I just sold some shares actually, and honestly, I'll be looking to maybe buy into some leaps. Leaps are long term, like long expiration dated contracts. So basically, so you see what I'm saying? This is what I put my alert as: Wells Fargo dip buyable January 2023 contract. So I'm going way out, give myself a whole bunch of time. Uh, Bank of America was another one that had done really well. Look how the Bank of America chart looks versus look how JP Morgan chart looks versus something like Bank of America on a daily. This is the kind of stuff that you have to pay attention to when you looking at when you're trying to dig into an industry specifically. Look how even that looks compared to Wells Fargo. Wells Fargo clearly wanted to be the best bank. It clearly wanted to be the best bank. Look at Wells Fargo compared to Citigroup, though. Those two, in my opinion, was probably where the bulk of the money is going to go this year. One that I personally like is Morgan Stanley. The chart looks horrific, but it's had a pretty safe, stable trend overall as far as the uptrend. I like it under 100, and that 94 to 98 range is where I'm looking to buy. I don't know if I'm buying shares or contracts yet, but that's pretty much where I'm looking to buy. And this is why I say you can't just go blindly buying dips. You have to know exactly what you're buying. what your plans for it are. And like I talked about with Tilray, I was very well aware of the fact that we could be coming back down to 640 or we could be going down to 240. I knew that when I bought that. That was the only risk adverse or risky trade or investment that I was willing to take. A lot of people still confused with Bitcoin. This dip, this whole dip was never buyable. I bought here because I was playing a bounce off of previous resistance. Once we started to flush that, I got stopped out of my trade. I call it a trade because that's what it turned into. I wanted it to be a long-term investment, but this is around the time we start to see that Bitcoin is not acting as a hedge to inflation. So, um, I think we see lower levels. We got the FOMC coming up January 25th, 26th. That's the next big thing, in my opinion. I don't think the market is crashing. You just got value stuff. Nothing looks good because banks are reporting. Um, Energy has already ran up. That has to pull back. Uh, Another thing I will say, Boeing is trying to break out, and you can see I got a lot of indicators up, but the green one, remember, is my 200-day moving average. So if Boeing can break out above that 200-day moving average, I think it does have room to run this year. I think the whole reopening trade, yet again, is going to work if things go smoothly with the pandemic. I know China, they locking stuff down. Something else that I will point out, NEO, if that break below 27.69, I can't make this stuff up. If that break below 27.69, we got some room to fall. I would honestly be looking to short this if it does break that. But I can say I was not expecting us to be here at this point in time. I thought the EV space could run this year. Um, ChargePoint already broke. I had got into some contracts right here, and I ended up selling for about a 30% profit up here once I saw that we were definitely topped out. I wasn't interested in shorting it, but this has room down to $12.60. So we'll see where that goes. But once the whole tech craze is over, EVs and semiconductors are the only thing I'm interested in. Notice I keep talking about Micron. Micron is going to pull back. This is, it has no, I kept saying it has no choice. I feel like it's just overextended. Um, I think it would be a great long-term investment, and I am willing to buy shares once we get back towards 90. I'm definitely going to keep buying down to about 80. And if for some reason we go lower, I will definitely be willing to buy more. This is the point where I start, under 85 is where I start getting interested in buying leaps, those long-term contracts. So that's where I see buying opportunities right now. My first priority is honestly Nucor and CLF. They haven't really ran this year. They haven't gotten they ran, but they haven't gotten overextended like other stuff. My second priority is uh, the banks, and I've talked about which ones I like specifically. I personally like Morgan Stanley for equity investment. I like Wells Fargo for trade. I like Bank of America for trade. I like Citigroup for trade. These banks don't always move in tandem, so we'll see which ones present the first buying opportunities. So that's where I'm at with that. I don't see any type of buying opportunity right now in QQQ or anything tech related until we get down to 350. That's when you start maybe trading it. Uh, you get into some positions and you set some stop losses. You take profit at certain points, right? As far as the long term hold, you probably, once we get to 350, I'm sure we'll find reasons to say this is a good time to start buying for the long term, and that's probably true. Uh, could be true. We'll see what it does once it gets to 350. We'll see what price action looking like, and after 350, you might see 342, 338, those types of levels. So we'll see where we at, because this is the anchor VWAP from I think that's the beginning of the pandemic. Yeah. So obviously, if we get down to 310, that's probably a no brainer. and a lot of people would be scared shitless if we got down to 310. But that's the perfect time to go shopping. That's why I say another opportunity is Target. You got those retail sales. That data's bad. You want to buy that fear when it makes sense. Buy fear when it makes sense. Don't just go buying dips. So that's pretty much what I'm looking at today specifically, and honestly over the next 3 to 6 months, because I don't see this stopping for another, probably until like the summertime when stuff start to calm down. This volatility here gonna be crazy up through that March FOMC, because that's gonna be the point where we probably hear something realistic about balance sheet runoff, because then I don't think they're gonna really say nothing at this January meeting. They're gonna talk about rates and tapering at the January meeting. They can't be talking about balance sheet runoff that far in advance. Like, so they got to address rates and tapering. So, I mean, they already kind of addressed that, but they got to be more specific and let us know exactly what their mind frame is. They probably going to say something about, we're going to see in some meeting minutes that maybe they have been talking about balance sheet runoff. So I appreciate you watching the video. Make sure you like and subscribe. Oh yeah, the last tech thing that I will be looking at is Snowflake. Got a nice pattern here. If it can break out of this handle to the upside, of course, I'm definitely interested. And this honestly probably gonna go to the below 240 or below 250. So we'll see when all the craze is over and we start getting back into tech. This could drag on all the way through March. That's what I'm expecting. I've been talking about Snowflake since November, December. I ain't touched it yet. I had no reason to. That's how you be patient. Patience is the name of the game, and that's how you always win. Just being patient, playing your levels, and sticking with where the Fed is headed, because they control the markets. So again, like I said, I appreciate y'all watching. Make sure you like and subscribe. Join our Discord at investorsanonymous.net, and I hope y'all trading safely and investing safely. So I'll catch y'all in the next video.